So, Roger, I'll pick on you first because this is not new to you at TIAA. You've been involved in this for some time. What do you do and what have you learned from it?
All right, so you're right. It's not new to us. We've been involved in climate and ESG issues for about 50 years, and we're really proud to be one of the leaders. And what we've learned over that period of time is you have to take a holistic approach. So first, we are a very large asset manager, and we think about, first, how do we vote the shares and the proxies? And we're really proud that we voted with shareholder resolutions about 82% of the time, much higher than a lot of others in the industry. And so, the first thing is use your voice as a shareholder to let management know that you care. The second thing that we've learned is you really are going to have to start to build databases and to really understand and dig in with what companies actually are doing and use that to engage them on getting more transparency, more disclosure, including oil companies and others. And the final thing that we've learned in terms of this being a holistic solution is we also own and manage a lot of assets and think about managing and owning those in a responsible way, be it real estate, ag, timber. So it's a holistic story here.
What a crassy, do you get credit for that?
We get some credit. To be fair, we've got two classes of investors. We've got a group for whom ESG, climate, very important, and they want to put their money there. We have a number of others who I think are less focused. One of the things that we've learned over time, though, is all of these factors, ESG, climate, governance, et cetera, important risks to manage. And now we're starting to see the conversation turn towards the fact that this is a positive return generator, taking these factors into consideration and creating investment theses around them.
So, Larry, can private investment make the difference in climate?
I think most of what you heard is a pretty total avoidance of the real problem, and that as long as this kind of thing is the focus, the problem's going to get worse. There are three things that need to happen if the world's going to make real progress on climate, none of which were mentioned by any of those people. One is we need to scale back the hundreds of billions of dollars that the world spends on fossil fuels and fossil fuel subsidies. We need to have governments stop around the world subsidizing fossil fuels and their ability and their use. Second, we need much more invested by governments in clean energies. And the way governments need to get the revenue to make those investments is by levying taxes and having the people and the organizations represented in that video paying more in taxes. And none of them are willing to say that. They'd rather talk about how they've got hired a chief green officer and how they're putting a solar power plant, solar something or other on their roof, than recognize that they need to pay more taxes. And the third thing is we need to tax things that are bad. Right now we have a world that's oriented to taxing things that are good, like work and saving, and we need to tax things that are bad, like putting emissions into the air. So as long as the word tax and subsidy are outside of the conversation, and it's all just, we'll feel better if we do this, the world's not going to make progress in solving this problem. And the president notwithstanding, emissions, the idea is that we're supposed to, in 20 or 30 years, get the level of emissions to zero. We haven't even achieved the much more modest goal of stopping emissions from growing year after year. So we need to get serious, not rhetorical about this.
One of the questions, Larry and I have been friends for a long, long time. We're both economists. One of the things I'm surprised I didn't hear him talk about is price. So most economists would argue, let's first put a price on this. And there's been a big debate about carbon pricing.
Is that carbon tax? Is that carbon tax?
Putting a carbon tax on is
a price.
There's a different way of doing it. You can sell the rights to emit, and the government can collect the revenue that way. But either way, you need the government doing something that puts the price of carbon substantially higher. And as long as the United States doesn't increase gasoline taxes from where they were a generation ago, we are fundamentally not serious as a country about this issue. And it doesn't really matter much what Larry Fink says in a letter to corporations.
Price.
Absolutely, price. And so Larry and I fully agree that part of this is to get the government, the public sector, and private sector working well together. And without a doubt, Larry and I agree that the role that the government can play is creating the right sets of incentives to drive the right kinds of outcomes. That's one approach. And we should think about that. I think there's clearly room for the private sector to find investable theses and put some private money behind this at scale. But there's no doubt this is a huge public policy issue that's got to be confronted by both the government creating the pricing mechanism and/or tax, and the private sector figuring out where to put some capital in order to make a difference here.
Roger, as an economist, wave your magic wand, do all the things that Larry just talked about. What does it do to the economy? Because we just had the Secretary of Treasury this week lecture a young woman from Sweden saying, don't talk to me about the climate until you've gone to college and gotten an economics degree. You've got a PhD in economics. So what would it do if we could do all those things? What would it do to the economy? Would it be bigger? Would it be smaller, or just the same?
Well, first, let's look at what's going on now. So we've already seen billions of dollars of insured assets going up in flames, going underwater, confronting issues. We suspect that there are probably health issues associated with this. And so the first thing you have to recognize is doing nothing is already increasing costs significantly, reducing the scale of the economy overall. Second point is this is a multi-generational issue. And one of the things that we have a hard time dealing with is an issue where the cost of the present out in the future are the benefits. Right. So the final point is, I suspect over time it will obviously change the nature of the economy, but I don't see any reason why investing in fixing a major social problem is going to force the economy to shrink. I think that is creating a false trade-off.
Hurt, help, or stay the same?
Rational climate policy will make us richer and with more jobs, because we'll avoid the damage from climate change, because there'll be new categories of investment in energy efficient production, because there'll be new jobs created in insulating buildings and building more fuel-efficient structures and modes of transportation. It will make us a richer society. It will make us a more equal society, and it will bring cooperation on a central planetary challenge across the world, which is something we badly need from a geopolitical point of view.
So, Roger, come back to the market. Larry says you have to have government intervention, and I think you agree with that. But on the private side, you said actually you can get better returns by investing green. If that's true, why doesn't everybody do it? I mean, people want to make more money. What's the imperfection in the marketplace?
Well, to be quite clear, part of the way you get better returns is to avoid some of the risks that are associated with things that are heavily pollutants, as an example. And so getting that mindset going is really important. There's been a long debate around when that ESG factors can create better returns over time. And I think the history is starting to show that that's the way that it goes. And so, you get better returns by always managing your risk down. And that's what this story is about.